Hello, everybody. Thank you for taking the time to watch this weekly tax update video. So this week, I wanted to talk about a potential tax strategy on how you can potentially move some of your taxable income to a significant other. This is something I do with my significant other. This could be beneficial for other people as well. Um, this is really only beneficial if you running your business, your LLC, is making a significant amount of income, taxable income or a taxable profit, while your significant other is making significantly less. This won't work if you are actually married. So one thing that my significant other and I joke about is marriage is a business decision, and it really is. Because when you become married, you either file as married filing joint, or you can lose a lot of tax credits and deductions if you file as married filing separate. The IRS actually punishes you for filing as married filing separate. There are some significant things you lose. Um, so, one of the things that we do, or what you can do as a strategy, is that you can't do if you're married, is pass some income to your significant other. You can do that by basically, we have you set up as an LLC, taxed as an S corporation. So then you set up your significant other as an LLC, and we tax them also as an S corporation. So we have the exact same setup. And then your significant other becomes a contractor to you. This works very well if you share finances and your significant other is in a significantly less tax bracket. So this is not my situation. I like to use extremes as a clear way to paint the picture. So let's say that your LLC is making 500,000 a year in taxable profit, which easily puts you in the 40% tax bracket. And it's actually like 37 or 36% is the highest bracket, but then you can throw in some taxes for state taxes or local taxes or whatever. Uh, we round up. So if you're making $500,000 and you're in the 40% bracket, quick math says that you're going to owe about $200,000 in tax. Well, if your significant other doesn't have any source of income and is making or is making very little income, let's say they're in the 10% bracket. So you could pass them, let's say, $50,000 off of your taxable income by having them do contract work for you. So $50,000 at the 40% tax bracket would save you $20,000 in tax. So then we pass that $50,000 to them as revenue for their business for being a contractor for you. They could do anything depending on what type of business you are. They could do administrative work. They could do, if you're in retail, they could do packaging and shipping for you, or marketing and advertising. If you're like a fitness coach, they could be a video editor or something like that. You could just give them like one of your tasks to claim as their contracted work, just like any other contractor. And then let's say you pass them that $50,000. You're taxed at that would be $50,000 off of your taxable bottom line of $500,000, saving you $20,000. We throw that into their business as revenue, and now we take expenses on it, such as a home office deduction. Well, that's typically $5,000 to $10,000 or more, depending on what home you live in. So let's do $5,000 as a home office expense. We throw in their vehicle with fuel, insurance, registration, repairs, maintenance, whatever. So let's take off another $5,000 for that. These are actually very conservative numbers, very small numbers. We're going to throw in some office supplies, a computer, the cell phone, the internet, stuff like that. So let's take off another $5,000 for expenses there. And then that gets us to $35,000 in taxable bottom line. Well, at this point, they are below that $65,000 threshold that requires us to run a W-2 for them, so they're outside of that, but they're above the $10,000 threshold. So we make them an S corporation to save them on that Medicare and Social Security tax. So now they have a $35,000 taxable profit times by their 10% tax bracket. They owe $3,500 in taxes. So that's total savings of about $16,500 in taxes just by making your significant other a contractor in your business. This is also a great way to still take advantage of some social programs. For example, if the significant other has kids, they could stay on Medicaid, they could go to college using Pell Grants and get better rates on student loans or whatever the deals are through FAFSA, all sorts of things, right? But you're able to share finances. Ultimately, you saved $17,000 in taxes, so there's more money in your pocket. This is a great way to do that. Why this doesn't work when you're married is because the moment you become married, the federal government looks at you as one whole. And so if your spouse works for you, they have to be an employee just like you have to be an employee of your own company. You can't be a contractor to your own company. So even if you're in a state where everything's not jointly owned by state law, so common property states like Idaho, I think Utah, Texas, and a few others are common property law states. Wherever most states say that if you set it up, you can be the 100% owner and your spouse doesn't own any of it. Well, that's state law. Well, federal law says, well, if you file as married filing joint, we look at everything as a whole. Therefore, if your spouse is working for you, they can't be a contractor the exact same way you can't be a contractor of your own company. So then we say, well, that $500,000 taxable profit is filed jointly, and the only thing you're going to end up doing is be required to pay W-2 wages to your spouse if they work for you. And now you're just going to be out an additional amount of Medicare and Social Security tax. So that's why it doesn't work if you're married. But if you are not married, your significant other, if they're in a much lower tax bracket, can then be a contractor to you. You're sharing finances, and that's a way you can then significantly lower your taxes. So had this come up as a specific question recently. So figured this would be a great topic for a video because it is a great tax planning strategy. Anyway, that's my 2 cents on this topic. I hope this is beneficial for everyone.